Okay, everyone, it is 5 after 9 on Tuesday, January 22nd, and we're looking at the British pound here. You can see that there was a massive jump in the British pound. The market bottomed out about 1.9335, just above my target from yesterday, if you remember, which is 93.15. And the market started to reverse fairly early in the session, which I found interesting because later on we discovered that the Federal Reserve in the U.S. had lowered interest rates by 75 basis points. They had an emergency meeting this morning, but obviously I would say somebody knew that something was going on at about 4 in the morning. As you can see here, starting about 3 o'clock in the morning, the British pound was making a beeline for the upside. I don't think that's coincidence. I'll just put it that way. So the professional money reverses the market. The rest of us discover what happened later. Really, there's no way to anticipate or even try and trade these kind of things other than trying to jump on board as quickly as possible. But there is a way to get on once the trend is already going. And let me go ahead and bring in Hercules. There we go. The technique that I'm talking about here is keeping your eye on the overall strength of the currency. And if you remember yesterday, we were talking a little bit about getting onto a currency that has strength behind it. So the key that you want to see once the market has moved up, okay, if let's say you're looking at the market, it's already pushed off of the lows here, you're starting to feel like you're missing out, you're missing the boat. Once the market gets into this region, what you need to see is that the strength on the US dollar is going down and that the strength on the euro and the pound is going up. Now, the reason why that's important is because if the US dollar is staying at the same strength, then odds are what you're seeing is only going on with the British pound and probably won't continue. So if the market pushes up here and you see that the US dollar, we'll put it over here. So you see that the US dollar on the strength meter is at 6, the pound, because the market, remember, the market had been moving down, and then you see that the pound, we'll say, is around 4. So then the market moves up, and a couple of hours go by, and if you see that the US dollar is at 5.75, and the British pound has gone up, we'll say, to 5, well, that's not a big change. Okay, you can see that the pound has gotten stronger, but we can see that on the chart. The key is that the US dollar is not getting weaker. Okay, so that's one scenario where, again, let me reiterate this, where if at the beginning of the move the US dollar is at 6, after the market has moved up a bit, the US dollar drops only slightly in strength and the British pound only gains slightly in strength, that's not a good sign for a big move or a continued move. Because remember, what we're talking about here is if the market has already moved, how do you decide to get on? How do you decide to get on board right here? Well, let's look at scenario number 2. Let's say the US dollar, got the British pound. We'll say the US dollar starts at 6 down here. The British pound goes to 4. After a couple of hours, you see the US dollar go to 5.5.